Alright guys, welcome back to the channel, and yeah, this is USD daily time frame, and I'm Naris FX, a day trader, because I always start trading from the daily time frame, and I've been on this trade, and this is just like the second day. If you zoom in, this is my entry, and this is the second day, because this is day one and this is day two, and I'm also trading to this imbalance here. You can see this FVG, so you should know what an FVG looks like by now. So I'm actually trading to this daily point of interest, which is this FVG here. So I want to say something here. I actually did this analysis from the weekly time frame. So not just because I'm a day trader, I should start from a daily time frame. I normally do my analysis using the top-down analysis. And right before I go into this video, I want to tell you that not just doing your analysis. After doing your analysis, you ought to know what entry model you're using so that you know how to enter and exit, because you might have a correct analysis, but it's the model that gives you the entry and the exit. So this entry model is called the CRT entry model, or the FVG entry model, where you see how price tapped into this FVG, not just price tapping into this FVG. Let me show you what the weekly time frame looks like here. Look at it now. I always say something in my videos that analyzing from the weekly time frame is going to really help you. And you can see overall in the weekly time frame we are bearish. So we are bearish. This was all like a counter trading here to the point of interest, which is this imbalance here, this FVG here. So because we are bearish throughout the week, you can actually look for bearish price movement so that you get into the price with a safer side of the trend, because they always say the trend is your friend. So looking at the 1 week time frame, we are bearish, and you want to be trading in line with the trend so as to minimize risks and fear. Yes. Now on the weekly time frame, we are bearish. So all I did was to mark out my weekly point of interest, which was this fair value cap on the weekly time frame. After I had this break of structure, so I was expecting price to continue lower. And look at, I've been targeting this draw on liquidity for a very long time, and price has not taken it out, and I believe this is the time. But I'm not a swing trader like I told you guys. I just focus on my 1:3, 1:4, 1:5, as much as price can offer, and leave the market. Yeah, so if I were to be a swing trader, I should have my take profit around this low and hold for as long as I want to. But no, I just prefer taking my 1:3. Then, since I have the idea of the trend and I know where the market is headed, I can always come over for a second entry. At the end, I'll still get the total amount of profit I'm supposed to get. If I should hold to this end, it's safer for me that way. I don't know about it, but for me, I feel like it's safer. So let's go back to the analysis in full. So on the weekly time frame, I already have my point of interest, and on the daily time frame, this is what the price look like here. That's my best time frame. So on the daily time frame, this is what will look like. So I usually call this a CRT entry model, because if I should take out box, this box is where we have our FVG. If I should take it out, look at it here. This is the FVG. I told you an FVG is a gap in between three price action, or three candlesticks, where we have one, candle two, and candle three. This is the cap. So this is a FVG here. This cap where I have my stop loss. And if you see, before the FVG, we've had too many highs. Let's just call it, this is one, this bearish candle, two, this bullish candle, three, four, five. 5 days. Liquidity has not been swept above 5 days. If I should zoom in, you can see that in this level, liquidity has not been swept above 5 days. And imagine taking out liquidity above 5 days, 5 good trading days. People that have been selling have their liquidity to be around there for 5 days. And because it's a CRT entry model, anytime you have a sweep of liquidity above the daily time frame, you go as fast as possible to your 15 or your 5 minute time frame to look for a shift in market structure in line with the trend, which is the bearish trend. Liquidity, the trend, liquidity, and this is the trend. This is the liquidity against above the 1, the 2, the 3, almost 6 trading days. And now, why is a high probability setup? Is because it's actually reacting to a weekly point of interest, and you have this fair value gap here, this fair value gap, this daily fair value gap. So this is a high probability trade setup for me. And now, where are you exiting the market? If you check on the 4 hours, this is where I'm exiting the market. From the 4 hours, we have this new opening gap around here, and if you can see what price is doing, price is trying to fill up the gap, react, and come back. Then on the daily time frame, we also have this to be a fair value gap here. So but I'm going to exit around this new week opening gap, which are very close to TP. Yeah. So on the 5 minutes, you want to look for a shift in market structure right inside your point of interest. So this is what I have. So when I already came to the market, I saw the shift in market structure. I won't lie, and I was very happy because I had my confirmation. I had my confirmation already. Yeah, then on the 1 hour, this is what I saw that made me enter the trade. So when I saw this fair value gap inside my point of interest, my weekly point of interest, I knew this was where I was going to enter from. So I entered the market around the fair value gap, having my stop loss around this swing gap, and that is it, guys. This is how the trade is going perfectly well. And if I should show you what it looks like on a trading view, it's actually nice that you have this kind of a clean setup. Let me take you to the trading view. So back on the trading view, this is what this trade looks like here, guys. It's a very nice setup, and I must say I really enjoy trading CRT method because of the swiftness of delivering price action. So you can see how everything played out directly. I just came in here, marked out my point of interest on the 1 hour, and yes, I just took that setup. Yeah, it's a nice trade entry. So understanding that price is supposed to come and balance this swift this impulsive move here. I knew that price was going to balance this move here. I think this was from CPI, then trading to this imbalance that I started with the new week opening gap. This is Monday gap here. So I already had all this in mind before entering this market, and that's how it all played out. So just in case you don't know, I do offer mentorship. I've not been really talking about it, but I can I do offer mentorship program, and I'm also creating a new group of traders, yeah, a new community of traders, ICT traders, just ICT traders. If you like ICT strategy and you want to be part of ICT strategy, you can click on the description of my channel here where I have a link. And please do also subscribe to the channel, like, follow, comment, share this video amongst your friends. Let's hit about 300 subscribers, guys. So you're free to join the community. I'm actually looking for the first 50 people that will join the community. Then we can talk about trading and how important ICT can be, different models. We still have more like the London session, and due to the fact that I've been trading CRT model for some days, it's like CRT model is all what is popping up and it's more convenient for me. But there are other strategies like the London kill zone strategy, Neon session strategy, AVG trade setup. Like this is a AVG entry model, but it's in line or is aligning with the CRT entry model. So AVG can just be a confluence of entry. So that's just it. Do well to like, share, subscribe, and comment. Thank you for watching to the end, because after this video, or as I'm ending this video, I'm going to close the trade. Remember, we filled our new week opening gap here, so I'm going to close the trade right away. Thank you, and subscribe, share.